Alright, so I decided to just do a video on futures with the same concept. I'm not going to call this a routine video though. I'm just going to call this SPY futures analysis or whatever. But doing the same exact thing as the routine series, I'm going to go through from the bigger time frame down to the smaller time frame and just break down what I think is important, what I think is important to note, just all that good stuff. So let's just go through this. Again, starting off with the weekly, max time. Just going to go ahead and mark this resistance and support twice before it had this push up. Let's go ahead and mark the range that it's in. Double resistance before it had a higher high. Let's move over to here. Another range about right here, it looks like. Yeah, right here. You have a pop right here. Bam, bam, bam. Resistance, 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 higher high. Then that's the breakout, which is also where COVID support is. So that's kind of cool to note. Again, I'm just looking at emerging candles that need to be marked as resistance right there. It looks like we have a tiny little range right here. Yeah, about right there. Because you have a resistance here, push up, next resistance. So now we're looking at where the next high breaks. Resistance there, didn't have a break till there. Low there. Move from there, drop. Little 3-bar play right here, pushed it up on top of this level, so that's important. So, okay, yeah, I'm going to leave that then. That's a very important level. And again, I know none of these levels are being looked at this exact moment, but it's still good to go through here because now you can just leave these levels on your chart. It's just like Fibonacci, you know, you can, every time I've marked Fibonacci for you guys, I've actually been able to, like my friend John, the other founder in chat, I think he's marked Fibonacci from way back in the day when we first were using it. And those levels are still being utilized to this day on stocks like Apple, Facebook, Microsoft, just a bunch of stocks. And the levels are still being utilized very crucially. I mean, they're bouncing right off of the same levels we marked a year ago. So that's really cool. That just shows you price history is very, very important. So I want to go ahead and mark this right here because I like this little gap range it had before COVID, or at COVID, I guess I should say. Drop, drop. Pretty much a 3-bar play, not really, because this didn't even try to be even with that one. It just wanted to keep dropping. Drop, drop, support on that line we marked earlier. We have a good resistance here. That was used as a support with a 3-bar play. Push up. Wick showing us go up. Again, showing a bullish trend line as it's on a support. That's very bullish. Push up. Just trying to see if I can mark any extra lines. And another thing you can try and do is try and find, like, you know, when you see like a support catch, you can go and try and find, like, you know, is that like a really big level over here? And I know it's not that big of an issue right here, but there's actually a small gap between this candle and this candle before it continuated up for this high before COVID hit, which ended up being used as a support for after we pushed for a new all-time high, and then we came back down and did that scary retracement everyone thought we were going to bleed from. And now we're again looking very bullish at this exact moment. If you're just looking at candlestick patterns, now right now we have yet to reclaim super bullish status because we are above this. So, you know, we're above that high. But if you're talking about this, you're not even above the actual all-time high. So if we're going to try and break a new comfort zone above us, it's going to have to be the all-time high. So you should definitely keep that mark because that's where your biggest bullish breakout's going to be from, or your biggest rejection's going to be from. Because it could instantly reject from here and go back and retrace here and show if it's going to be more bearish than bullish or not. If it comes down here and tests this support, then it's still half and half. It's not more bullish or more bearish. Just because going off of the concept of higher highs, lower lows, you know, all that good stuff. It's good to note that stuff. And yeah, if it doesn't break that, then it's going to be, you know, just kind of continuating between this range still. So let's break this down to the daily. Zoom in right there. And let's delete some of these levels because I just wanted to show you all that example. I think that one was this. Yeah. Which on the daily, you get a, you know, a little bit of different picture. So you can go ahead and mark this resistance because it was also used as a higher or a lower. God, I cannot talk today. Is lower than this over here, below this resistance. So that's bearish. Drop. You have it being higher here, so it's looking a little more bullish. Catch. And it actually kind of looks like we're doing a, I called out that we were dropping and catching support, but from this falling wedge. This was a falling wedge. That's a falling wedge, so that's a bullish pattern. Bullish breakout. And now I'm kind of looking at deleting these lines, and check this out. that is an inverse head and shoulders. That is very bullish, and we're on the daily time frame, so there's a very important thing to note. So in my opinion, we will be breaking out very soon if this can keep getting tested, because at this moment we're just carrying this line. It just keeps moving, so it's not a very accurate line. So right now we're going off of pure price action. Right now we know we're in this range. We know we're in this range for sure. So lowest we could fall before a very ugly breakout would be here, and the same for the other side for a bullish breakout would be here. All-time high as well. Let's go ahead and mark that. So the emerging candles, let's mark those. So you have 1, 2, 3. Let's just mark those 3 right now since that's around current price. So now we know we have this zoomed in right here. So we're focusing on these 3 resistances right now. Moved up here. This is where it hit us. And again, I didn't look over here yet. I instantly just marked the emerging candles from this side before it had that horrible, I'm not going to say fall. It was kind of a recovery retracement, if anything. But again, I didn't look over here yet. I just looked over here to mark those emerging candles. I look over to the right. What are they being used as? Almost a resistance, pushes up, resistance, support, resistance. So it looks like we're taking room by room. So if we are going to have another bullish day, we're going to be taking this range. We're going to be at the 3500s very soon if this continues. So we can go ahead and mark this one now. So we know the only next resistances for SPY for the market are 3479s, 3500s, 3525s, which you could just say 3520s if you want, and then the 3570s, which end up being all-time high at 3580s. So we're kind of watching these next 3 resistances for a more bullish breakout. But pattern recognition is why I really wanted to push that across this to you guys today. Because not just only, and I posted this in the chat, you can go back and see that I posted the falling wedge. Now you're seeing me post the inverse head and shoulders. So I just want to show you guys, pattern recognition is very slept on. If you guys are not learning at least a pattern or 2 a week, or learning a few a month, then you are highly missing out on some very easy to catch plays, because pattern recognition is very good for awareness. Because now I'm able to realize there's a more bullish sentiment here than there is a bearish one, just because we're still holding on very crucial levels. We're doing not just a bullish falling wedge, but a bullish inverse head and shoulders. So that's 2 good patterns right there on a very big time frame. I'm not on the 5 minute, so it's good to note that. So the next thing you want to take into account is, all right, what do I need to break next then? The things you need to break next is what we just marked, those next emerging levels. So you have like 4 resistances that are very, very, very important on very big time frames right ahead. So I just wanted to mark this video up for you guys. If you do appreciate this video, please let me know in chat or tag me. If you guys need any of those small videos made, please let me know and I'll go make them. They're like 1-2 minute videos where I just cover some quick analysis on whatever ticker you guys send me. Don't blow me up, but I do send out tons of videos, so I'd be very glad to help anyone who wants to go through some analysis together. I was messaging Mythin last night at like 2 a.m. or whatever my time, and I'll message you guys during the day. So whatever you guys need, let me know.